Complexity is the enemy of execution. This is the weekly review and forecast at chartingwealth.com. Looks like we have some important weekly vertical crossovers. As we begin the broadcast, we first go to SPY. That's the Standard & Poor's 500. What do we see going on there? We see a weekly vertical crossover is official at the end of the week. It is just barely pushing through. Now, some concerns I have about this weekly vertical crossover is as we look at the wick on the prior week's candle, we have not attained that movement at this time. We haven't had that big a drop. That concerns me. That is a very weak crossover going down, but it is a crossover going down. I want you to pay close attention when the markets open again on Tuesday. Remember, it's Memorial Day weekend here in the States. So I want everybody in the States to have a wonderful Memorial Day weekend. Our folks overseas, just be aware of that. Markets are closed on Monday for the Memorial Day holiday. So we'll be open on Tuesday. I want you to look around 10:30 after idiot hour ends in the market and see what things look like either on the 30-minute chart or just check at noon and see what the 4-hour chart looks like. If things bounce off that red signal line, that very light blue crossover can move right away from it and pull right back through. So it'll end up not being a crossover if there's a big week next week. So be careful, be aware. I give you that caveat. Now, what do we see as far as the derivative oscillator goes? It, of course, had turned red earlier, so it is negative. But do be aware also, another little caveat, the S&P 500 for the day on Friday was up 0.29%. We'll play that out as we move through the other charts. Let's look at the 2-day chart. What do we see there? 3 down candles, and again, you see where the wick on this latest candle, and again, it is only the first day of the latest candle. It'll finish drawing on Monday. It's a 2-day candle. And we see that on the candle that ended Thursday, that represented Wednesday and Thursday, the wick was a lot lower. So again, as we see this down movement, you know what we'll do too is we're going to redraw the trend line. As we see that movement, as it goes down, we see the price percent oscillators heading down quite nicely. That's good. And the derivative oscillators losing downward momentum. Now remember, our big call is always with the price percent oscillator. And of course, complexity is the enemy of execution. That's what we started with here. We keep this simple. We don't want to overthink things, overcomplicate stuff. Occam's razor tells us that the simplest answer is the best answer. You have too many moving parts and the machine breaks down easily and you can run into confusion and analysis paralysis, which is what we stay away from. We see the 4-hour chart. What we see for the course of the day is up movement in the morning and then a sideways slide in the afternoon. So again, what happens on Monday morning is going to be very important for you to consider when you're considering jumping into a down move on the S&P 500 after this weekly vertical crossover. Again, a weak one, but we will keep our eye on things and be ready to move on a practice trade there. Qs, let's look at the Qs. Little different, isn't it? In fact, what you see happening on the Qs on the weekly chart, and again, weekly vertical crossover, we need to move that line. We also change our arrow. It's what's so beautiful about freestockcharts.com and TC2000 is that it's so easy to do all of this stuff. If you want the paid version, we have a off, $25 off. If you look in the show notes, follow that link, you can sign up for TC2000, the paid version of freestockcharts.com, save $25. Now, the crossover going down on the NASDAQ 100 is much easier to see and much cleaner. In fact, you also see that the wick on the bottom of the prior weekly candle doesn't go as low as this week's. So I can in fact move it aside. You can see that. So that's nice. Derivative oscillators also bigger. Things are cleaner and clearer on the Qs. So we're happy to see that. And again, Same rules apply. Look around 10:30 on the 30-minute chart after 8 hours. See how the markets are percolating along, or just wait until noon. Look at your 4-hour chart for a potential jumping in point on Tuesday morning. Remember, markets closed Monday. What do we see the first day of this latest 2-day candle? I'm going to move the chart. Okay, we see down movement, not as strong as the prior 2-day candle. Derivative oscillator, however, is heading down quite strongly. Price percent oscillator is losing some downward momentum, and we will redraw our trend line to try to capture. Oh, that's nice. We're getting, multiple candles. Looks like 5 going down. And again, I don't want to attach that latest candle since it's not drawn yet. And again, price percent oscillator is heading down. Derivative oscillator still negative, lost a little bit of energy. 4-hour chart, what do we see again? We saw a green spinning top indecision in the morning, and then that down movement in the afternoon that triggered more of a down move. We do see the price percent oscillator is not quite flat. It's heading down. Derivative oscillator is about flat. So again, keep your eye on the charts on Monday and see if you can find a jumping in point. The Qs looks to be the better bet for jumping into a practice trade. We'll see. We'll let the charts lead us. We'll see what happens on Tuesday morning. And I'm sorry if I'm saying Monday occasionally. That is what we're typically used to, but because of the holiday, it's changed things. Let's take a look at bonds. What are bonds doing? Bonds are up 0.09% for the day. Now remember, we thought this is what it looks like when it's about to cross over but bounces off. That happened, and that could happen on Monday on the Qs and the S&P 500. On the 3rd of May, looked like that week ending then we were going to have a crossover, but it bounced off. And in fact, these last 3 weeks, nice strong up movement that we see in 20-year bonds. Connected three candles of strong weekly up movement. Derivative oscillator gaining upward momentum. Price percent oscillator spiking up. That's quite nice. 2-day chart, of course, crossed over back on the 7th, and it continues to move up nicely. We're going to take an opportunity to redraw a little bit the candles there. And I guess I got to be careful here because that candle's not drawn yet. I keep forgetting that. Don't try to draw a trend line on a candle that's not completed drawing. You'll notice when you log back in after the next day's movement, it'll screw your trend line up. And again, we don't call candles until they're drawn. But again, a nice up movement. However, we do see that the prior fully drawn 2-day candle from Wednesday and Thursday of this week are actually reached higher. But the derivative oscillator is gaining momentum. Price percent oscillator is heading up on the 2-day chart. When we go to that 4-hour chart, what do we see there? Of course, those of you who are paying attention, we had that crossover going up in the morning on Thursday the 23rd. Those of you who are looking for a jumping in point found one in the afternoon. And of course, we had some more up movement, not a great deal, 0.09%. A little bit of a stalling in the morning, but more up movement in the afternoon. And again, we see that prior candle going higher. So keep an eye now that you've jumped in on the 2-day chart and the weekly chart. Remember, we just used the 4-hour chart as a trigger chart. So keep your eye on that if you're in that up move on bonds. Now, so we did have an exciting week with one jumping in point, and of course ended the week with 2 weekly vertical crossovers. Let's lastly go to gold. And of course, we don't start on the 4-hour chart. You always start on your biggest chart. Gold crossed over going down all the way back on the 29th, the week ending the 29th of March. And we've seen it going sideways over the last 4 weeks or so. We have a red down candle for the week. It's really a red spinning top. It is a down candle. Has a little bit of a wick on the top, a longer wick on the bottom. Price percent oscillator still going down, not at the same angle it had been the week before. It's flattened out a little on its derivative oscillator, losing downward momentum. So we were up for the day 0.11%. And we don't really have much of an ability to redraw this trend line on the weekly chart at this point. We're still in a confirmed down move, closed at 121.30. And we look at the 2-day chart. What do we see there? Well, 2-day chart, did not cross over going down as we thought it might on the 21st, that 2-day candle ending then. And it's really slid sideways up a little bit. We have a green up candle So far forming first day of this latest 2-day candle. Derivative oscillator still losing upward momentum. Price percent oscillator appears to be pulling away from the red signal line. We'll see how things sort out. You got the weekly in a confirmed down move, 2-day chart in a confirmed up move. So things are trying to sort. We'll see if and when. Well, it will clear up at some point. Which way it's going to go, we don't know. So we saw up movement on Thursday afternoon in the morning and the afternoon. And then on Friday, really a sideways slide, moving, lots of indecision in the morning, moving up in the afternoon. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. So we got the 2-day and the 4-hour moving up, but that weekly still in a confirmed down move doesn't give us a jumping in point. We'll see how gold sorts its way out. Folks, that's where we are as we end the week. Go into a holiday weekend here in the States. I sent out a big order of books today. If you don't have the book, our book, Charting Your Way to Wealth, man, you need it. We'll get you a copy no matter where you are in the world. If you're in the States, of course, follow the link in the show notes. You can purchase our book. There's also Trader's Journals available. Those are printed copies of what we make available for you for free in the show notes every single day. That is the market worksheets, both the weekly, the daily, and the trade worksheet. If you jump into a trade, a practice trade this next week, make sure to print out that trade worksheet and fill it out. If you want to get a book that compiles 3 months worth of the daily market, weekly market, and the trade worksheets, then please order one. You can also order your book when you do that. If you happen to be overseas and want to order the book, all I need you to do is email us. And again, whenever you have questions, problems, concerns, email us. Same address for everybody, cw@chartingwealth.com. We'll get your email. We'll send you an invoice. You pay that invoice. It's a PayPal invoice. We'll send your book out wherever in the world you live where you get mail. We'll be happy to do so. We appreciate all of our foreign listeners, no matter where you are in the world. I'm always excited to hear from you. And folks, again, we care about you. We're here for you. We want to hear what you need and what we can answer for you. I told you we're starting the Charting Wealth Academy. We've got some special intensive training we're going to be offering here soon involving options, involving understanding how to use those, both covered calls, puts, calls, leaps, you name it. We're going to be talking a lot about that in that training, along with really honing down what it is we do here. Now, the book covers so many of the basics that we have here. It explains to you why we use the type of candlesticks that we use, the Heiken Ashi candlesticks, and how important they are. We also talk about the price percent oscillator, which is so key to everything we use, the derivative oscillator, the Bollinger Bands, trend lines, how to draw them, how to use them. And we're going to be focusing in this intensive training on really keying into entry points and exit points, setting things up and letting them run, and being able to leverage deals and understand how all of this works together so that you set up a total trading platform. We need you to follow us every single day, 10 to 15 minutes. You got to get the basics first. You got to get good at the basics. And I'll be the first to tell you, all you got to have is the basics. If you can figure out how to chart stocks, ETFs, whatever it is you're interested in, and you can see the ebb and flow, and you can use your weekly chart, and you can know when to be out of the market, when to be in the market, when to short the market, when to go long in the market. All those things are so important because the space between the crossovers, when you can get in, when you should get out, there's plenty there to satisfy anyone. And what we try to do is cut down the risk, maximize the benefits and the opportunity, but you got to practice it. You got to learn the uniqueness of each ETF, each stock. I'm not a believer in going around just jumping into any and everything because it's potentially set up. You got to know the personalities of each of these, and when you find things you're interested in, that's what you need to follow. Now, all of the Patreon members, to wrap things up, if you're a Patreon member, remember we have our next Patreon telephone call-in question and answer for our Patreon members at all levels. That is going to be on Wednesday, June the 5th. In the meantime, Patreon members, please email me, cw@chartingwealth.com, email address for everybody, but I need my Patreon members to email me the ETFs and stocks they are interested in having me review. I'm going to do a special review for you prior to the weekly call-in or the monthly call-in. And again, if you want to be a Patreon supporter, here's how you do it. Follow the link in the show notes to Patreon. Sign up and support us. If you appreciate the free work that we do here every day and have done for years, helping you master this and people all across the planet. What we do is dangerous here, folks. Why is it dangerous? Because it empowers you. Because when you watch the news, you read the financial media, they're all selling you ads or something. We talk about the real thing. We separate the signal from the noise. And the signal is price movement. And if you can understand that, it doesn't really matter what they say. It matters what's happening in reality. We're not talking about opinion. We are looking for facts. That's what we want to find, and we want to find these turning points and make these markets work for us. Stock charts is what it's all about. People who tell you, well, I'm a value investor. Well, you know what? You pay too much for a stock, and it ain't a good buy. We were talking about that yesterday. You want to make sure you can read these charts. You want to invest in valuable things. Buy them at the right price. My friends, that's it for the week. God bless you all. For Americans, U.S. citizens, hope you have a great Memorial Day weekend. Everyone else across the world, God bless you and your families. All the best, my friends, from the whole team here at Charting Wealth World Headquarters.